Okay, so who's excited to talk about insurance? All right, that was actually pretty good. That was more than I expected. So in the next 5 minutes, I'm going to talk to you about why I'm excited about insurance, how the industry is being disrupted, and some opportunities that has created. And hopefully by the end, you guys will be even more excited about insurance. So briefly, what I'm going to touch on, I don't know why the font is weird, you can't read any of that, but that's fine because I'm going to talk about it. How the industry is being disrupted by online distribution. Specifically, how that's creating the opportunity to sell insurance as an incidental product. And if you're wondering what that means, don't worry, I will talk about it in detail. So who am I and why am I talking about this? I'm with Jump Capital. We're a venture capital firm based in Chicago with offices in New York and San Francisco. We primarily make $3 to $15 million Series A and B investments, and we invest primarily in fintech, enterprise technology, and healthcare. Me, I am a vice president with Jump. I focus on fintech and insurance. Invested in over 35 companies with Jump, including companies like Personal Capital and Narrative Science. And prior to joining Jump, I was in the financial institutions group at Morgan Stanley and Deloitte Consulting. I also am a Kaufman Fellow. It is a fantastic program, as Blair mentioned. So when I look at the insurance industry, what I see is an absolutely massive industry. There's $2.7 trillion in annual life insurance premiums and over $2 trillion in annual non-life premiums, with over $1.3 trillion in annual premiums just in the United States. So huge market. And this market is starting to attract a significant amount of venture investment, as many of you probably know. Just in Q1 of this year, there was 47 deals and $650 million deployed into InsuranceTech. The reason that this is happening is not just because it's a huge market, but also because there's a huge opportunity to improve profitability in this industry. Right now, most insurance companies don't make any underwriting profit. What this means is that for each dollar they collect in premiums, they pay out $1 in claims and expenses. So they don't make any money on that, they make all their money on the float. It's estimated that by using technology, insurance companies can increase underwriting profit by over 20%. So you take 20% times the big numbers we looked at before, that is a huge opportunity. The biggest opportunity across the value chain in insurance, it's estimated, is in sales and distribution, where it's estimated that underwriting profit can be increased by over 8 percentage points. The reason there's this big opportunity in sales and distribution is because right now insurance is primarily distributed by large networks of inefficient in-person agents. Some policies, such as commercial, are almost exclusively distributed by agents. Others, such as auto policies, are beginning to be distributed online. And I would expect over the next several years for all these numbers to significantly decrease as distribution moves largely online. And this move from offline to online distribution is something we've seen across a number of other financial products, from starting with online banking and brokerage, and more recently moving to things like online lending, which is increasingly being distributed online. I think it's pretty predictable that insurance will follow the same path to online distribution over the next few years. Once we acknowledge that distribution will move online for insurance, we can then look at what are the different ways to monetize this shift. And there's several ways this can be done. You can create a direct-to-consumer online brand, you can build comparison sites, you can build technology to help existing players compete online, or you can sell insurance as an incidental product. And what do I mean when I say sell it as an incidental product? What I'm talking about there is that customers aren't coming to you to buy insurance, they're coming to you for some other reason, and by providing that something else, it gives you the opportunity to sell them insurance. And I think that this is a uniquely well-suited strategy for insurance distribution for a few reasons. The first is that insurance is by definition an incidental product. You don't buy insurance in a vacuum. You buy insurance because you want to protect something else. So if you're involved in providing that something else, you're in the right position to sell insurance. The second reason is that customers just don't shop around much for insurance. For example, and they don't want to shop around. For example, over the last 3 years, only 18% of homeowners switched homeowners policies. And of those that switched, most of them only switched once. So there's just not much shopping around in the insurance industry. How many of you want to shop around for insurance? None of you. And then the third reason is that even if you did want to get customers to shop around or target those customers that are choosing to shop around, they're extremely expensive to acquire. Insurance and insurance-related keywords are the most expensive keywords on Google. So using things like search engine marketing to reach customers just is not effective. So you put this all together, incidental strategy seems to make a lot of sense. And this actually is something that has been utilized in the offline world that we're coming from. For example, Allstate has a program that allows auto dealers to sell insurance in the dealerships. Problem with this is that it costs $200,000 to get set up, it takes 2 months to get trained and and licensed, and then you need to dedicate space in your office for it and have individuals do it. Now, in this online distribution world that we're moving to, this is much more effective. It's highly scalable. You can sell direct to customers or have one online agent that's selling it. In addition, you can have a very low friction experience for the consumer. For example, you can take all the data that you're gathering from whatever the primary service is that you're selling, put that into the application, and kind of automate that process for it to make it a very low friction experience. So that's why I think that this strategy is perfectly suited to the online world that we're moving towards. So, in summary, insurance is a huge industry. It's being disrupted by online distribution. I think that one of the most exciting strategies in this world is this incidental strategy that I talked about, something that I'm very excited about. I'm also looking at a number of other things in insurance. And if you're also looking at things in insurance, I'd love to talk to you about that. And if not, I hope in these 5 minutes I at least got you a little bit excited about insurance. Thank you.